Guys, welcome back to another video. Today we are talking about crypto. Now, please don't get me wrong. I am not a crypto guy. I'm not a crypto influencer. I'm just some random dude on the internet that knows a little bit about crypto. I know enough that I'm dangerous to myself. Okay, so anything I say today, please, not financial advice. Don't take my opinion as gospel or anything like that. Okay, I'm just here to talk about crypto content because, as we know, we're currently in a bull market, right? BTC has hit its all-time high and we're just moving up and up and up. So what I wanted to do was revisit my journey thus far. I was part of the last bull run, which was what, 2020, 2021, where I climbed the heights of six-figure gains. And then because I didn't really learn anything, I completely lost most of it and dwindled my earnings down to double digits. And it was, yeah, my portfolio got completely smashed down to low double digits. 90% of my portfolio was completely wiped out, partly due to FTX, partly due to Luna. So just the whole ordeal just really ruined me. On top of that, just not knowing when to get out, not really understanding market trends. So hopefully this time we learn something new. So with that said, what I'm going to do is today go through some of the tools that I saved on my browser since the last run, and let's see if they're any use to you guys. But also there's a couple of tools towards the end that I think, even though I don't completely understand it, I'll be honest with you, I think there could be some value in it. So first of all, what you're looking at is called TradeView. It's a platform that looks at charts, and it's great. It's a free tool. You can buy a premium version that lets you have all more fancier features, but this is a free version. You can download it onto your computer, and it allows you to save kind of like a whole bunch of coins as your favorites, and you can kind of track them. As you can see here on my screen, I've got BTC, ETH, Solana, Cardano, Phantom, blah blah blah. This is a lot of coins that I've invested in and pretty much dabbled in and whatnot. So right now I have on screen Bitcoin / USD, and one of the few things you want to do is learn some basic technical analysis. Again, I'm not a guru. I'm not here to teach you anything. There's a lot of information on the internet with YouTube that shows you how to do all this stuff. But if you're really time poor, I recommend you use AI. Like literally now in 2024, with the power of AI, literally just ask Google Gemini, Fibonacci retracements, Fibonacci extensions, and it will spit you out something that's really concise that you can follow, and you can really experiment on TradeView and track. Now, what I've got here is a Fibonacci retracement where I've gone from the swing high, right, down to the swing low here. So I've measured it from here to here. I've just kind of just pulled it out so I can see my lines. And Fibonacci retracements essentially shows you certain areas of support and resistance. So as you can see here on the 50% line, this is a line of where we found it could have been resistance, but it broke through and now it's become support. So with the sequence here, we expected this to then become the new line of support. It broke through, it's continued to break through, but as you can see, at certain levels, it acts as support and resistance, and it kind of just gives you an estimation based on the Fibonacci sequence where you can expect the next support or next resistance lines to be, right? Again, please just look up on these things. It's quick Google. You'll learn a lot by understanding trend lines. Even if it's just basically understanding resistance and support lines, I think you'll go far. And I think as people that dabble in crypto and trade, I don't recommend that you do daily trading anyway, because it requires a lot of technical analysis, and unless you're willing to really dedicate some time to it, you're not going to make it very far. But it's always kind of just helpful to know certain kind of technical analysis like EMAs and buying volumes and selling volumes and MACDs and all these other things, because when you watch influencers and they talk about technical analysis, it kind of helps you understand. But as a start, just understanding trend lines, resistance, supports, I think that's very valuable. Okay, so let's go to my first bookmark that I've saved here, which is the Crypto Fear and Greed Index. Now, we've heard it many times over, all right? Crypto Fear and Greed. What it essentially means is the market sentiment in crypto land, how bullish people are feeling, how greedy people are feeling, or how scared or how fearful they are. I think Warren Buffett once said that when there's blood on the street and everyone is fearful, that's when you should start buying. That is a tried and true kind of mentality, because had you bought when everything was tanking and everyone was fearful, and you've waited for this bull run, you would have been quite successful, and I imagine a lot of your coins are pretty much up. So during extreme fear, this can be a sign that investors are too worried, and it could be a buying opportunity, whereas when it's too greedy, then there could be a market correction, right? Right now, Fear and Greed Index is 81. Let's see if we can chart this. Now, right now we're here, right? We're 81. Back in, what is this? 7th of January 2021, we were at 91 or 93 even, because obviously the markets were going parabolic and everyone was just funneling money in. Around this time, 2021, probably COVID, stimulus checks was being pumped out. Everyone was putting their extra stimulus checks into crypto. The NFT market was booming. And as you can see, it stayed up there for a little bit, and then there was a bit of a correction. So 22nd of January 21, there was major correction leading to the Fear and Greed Index plummeting to 40. So between 29th of December and then 24th of January, literally, you know, a month's time, 2 months' time, it just plummeted. So there was that correction there after a period of greed. And this kind of just helps you track that and understand where we are in that cycle. So the Fear and Greed Index is always good to kind of know. So the next thing I have is We're Gonna Make It, WGMI. So this page tracks essentially the NFT market back then, 2021, 2022. NFTs was popping off, and I was kind of making a lot of content around NFTs. And if you are still an NFT degenerate, then this page is great for you, because it tracks where everything is at the moment. So if you can take a look at this, Bored Ape Yacht Club, currently its 30-day floor price is 22.92 ETH, which when I worked it out, I think it was still like 88,000 or something like that. So still a lot of money in NFTs, and just, yeah, expensive. So yeah, if you're interested in NFTs, you're still looking at flipping NFTs, although that narrative for like profile pictures has maybe died down. But again, remember the fear and greed cycle. When there's fear in the market, in the NFT market, perhaps this is a good time for you, if your risk tolerance is there, to look at purchasing a NFT. And as you can see here, the 30-day price change is massive. Like Mutant 8 Yacht Club has gone down 41%, but you can also see My Lady Maker here has gone up by 72%. So there's markets within markets within markets. And you know, these are blue chip ones where one could argue that there's still a lot of value in them, and eventually the narrative might return and NFTs might be a big thing. But yeah, We Are Gonna Make It.io, WGMI.io, is one of those sites that I was tracking back in the day looking at NFTs. Okay, so DEX Tools. DEX Tools is an interesting one because essentially it's a trading platform or a board that shows you everything that's currently traded on decentralized exchanges, and you can choose whichever chain you want. You can go Ethereum with Uniswap or BNB chain with PancakeSwap, and you can see the different kind of degenerate coins that people are swapping, whether it's, game coins or meme coins. You'll find coins on dexes that are not are available on centralized exchanges or the more popular exchanges. So here, for example, you can see, let's go to BNB, Pancake Swap, right? Hopefully this loads. You can see here Flokita is being swapped with wrapped BNB. You can see HODL, Floki, all these random coins that is currently able to be swapped, and it's pairs. So there's not the usual Binance, or there's not the usual ETH, or there's different types of alternate pairs. So if you click on one, you'll be able to see the different pairs, and you'll see the DEX exchange that you could purchase or swap or trade them on. So DEX tools is a useful one. I really don't play around with DEXs, but it's always just kind of good to understand how it all works and experiment. And really, crypto is just a learning process. So if you're interested, hop in DEX Tools and figure it all out. So dextools.io. That's another interesting one to kind of just poke around and learn. Now, back in the big bull run, I saw a video and it linked me to this page, Look into Bitcoin, and it talked about this MVRV Z scores, and I'm not going to pretend like I know what this is all about or what it means, or I'm just not smart enough in this space, right? But I've obviously saved these bookmarks for a reason, because I think there's value in them, and maybe you can find value in them. So go to lookintobitcoin.com, and there's various charts. Now, this chart is used to identify historical periods where value is moving usually high above realized value. So you guys can again use AI to give you a summary of what MVRVZ scores are, but essentially what it's saying is it's tracked historical data, and it shows us that when it gets to this red zone, right? Let's see. When it gets to this red zone or this orange line, so when it enters this orange line, it means that it's reached its market peak, right? I'm just moving myself over here. And historically, it showed that it's been able to track it quite accurately within 2 weeks of it hitting its peak. So right now we are here, and historically speaking, every time it's hit this yellow zone, it's then either corrected or done a big dump. So again, we're tracking upwards to this red zone, and you can expect, if you look on a fairly daily basis, if it's starting to move up to this zone, then expect a correction, and again, it may be an indication for you to sell at that point. And a lot of the times when it dumps, so when value or capital moves out of Bitcoin, then you could potentially expect that the money, the capital flows into altcoins. So then it may be altcoin season. But a lot of you, depending on whether you trade Bitcoin, this is a very useful kind of page to look at. Now, this chart, the HODL chart ratio, looks at the differences in between how long wallets have held the Bitcoin. So you guys can read this yourself and try to understand it yourself. But again, I'm not like some kind of expert in this, but when the 1 week value is significantly higher than the 1 to 2 year hold value, then it shows that the market is overheating. So as you can see here, we're not there yet, we've reached it, but every time we've reached this red area, the market has corrected. So it's showing that all of a sudden there's more wallets out there that has held Bitcoin for only a week versus those that have held it for more, indicating if those that have only held it for a week, they're new, they've just bought into Bitcoin, they're trying to ride the wave. There's a lot of capital that's just come in, new capital, only a week old, and it may be that the market is very overheated, there's a lot of FOMO, and that there may be a dump, a correction coming up. So definitely look at our HODL ratio and try to understand that as well. So this final chart is quite interesting. It talks about net unrealized profit losses when it comes to Bitcoin holders and where we are in the market, and kind of relates that to market mentality and market sentiment. So right now we're climbing up and we're in the euphoria greed place at the moment. So it, let me see, what does it do? The key principle of this tool is in the ratio between market cap and Bitcoin investors taking profit. When a market cap rises much faster than profit taking, we see that market is overheating. And one could say that due to investor greed in the red band, for strategic investors, such times have historically been favorable to take profit. Okay, so that we're in that zone right there. So I don't know, look, this is just basic stuff that I've been looking at and I've kind of been tracking. Again, it's very mediocre and I'm definitely not a crypto expert, but perhaps these are some tools that you can definitely use to enhance your understanding of cryptocurrency, trading, tracking, you know, understanding price targets and support lines and where to buy, where to sell, when to get in, when to get out. So all that good stuff is there for you. It's all there on the internet waiting for you to absorb and really use to your advantage. So with that said, hopefully this was of some benefit and I'll see you guys next time. All right, bye.